Good morning, everyone. Welcome to Animal Markets. My name is Chris. Together, we're going to take a look at the strategy webinar on this 26th of August. We're going to take a look at the Forex market and technical analysis together. First of all, though, be aware that this webinar is intended for a global audience. It may not be suitable for everyone. Take a look at animalmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information, whether this is suitable, and other conditions and details. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Take a look at the MetaTrader 4 Supreme Edition, 56 features. A lot of good things there. Take a look at that. Click on this Find Out More button and see all the advantages of this Supreme Edition, specifically from Animal Markets. All right, so let's take a quick look at what's going on. Anything new going on? Let's see. Not big news. We've got medium news today so far. Nothing drastic, at least from this point of view. Now we know, of course, the market has been moving a lot, so I guess every day is a bit exciting. Let's see, take a look at this market heat map. And we can see some big movers here, like the euro, pound versus odd New Zealand crosses. Pound in general, big mover. And the dollars are a bit lower. Here we see the euro dollar. Good change. Not so much volatility though. And the lowest movers are New Zealand, euro pound, euro Swiss, odd CAD. The typical ones. Pound USD not so much, but these are quite typical. You know, the kind of crosses that don't tend to move much are located where there's little movement and volatility. All right, let's get the charts. Cool. So does anyone have, first of all, a preference? I have in mind to discuss actually waves and fibs, but if you have something specific you would rather take a look at, let me know. In general, though, if we look at the market, yesterday we actually didn't get the break to the upside, and we did get a retracement lower. I was thinking 114.75 could be a bouncing spot because of this 15-minute chart. Well, it actually did bounce a bit, but it just bounced about, let's say, 3 hours, and then still made one more dip down. And in fact, it went to the 50 fib. When we put a fib on this move up, let's see, something's wrong here. No, it just missed the 50 fib. Well, yeah, it was trying to get there. It didn't get there quite yet, but there was no upside yesterday. There was a bit of an intraday downside, and then we got a bounce eventually in the later part of the New York session and made another rally. So now we're kind of in the middle of, look at the moving averages, they're all aligned. It shows that basically price had made this dip down, rally up and dip down, and kind of finding an equilibrium around 115 at the moment. And basically a break, we need a break to the upside, a break probably above, let's see, probably above these tops here, or a break below this, probably this trend line, which will be counter trend at the moment, certainly. But would be a breakout, counter trend breakout, perhaps down to the 50 fib that was still not hit yet. You know, so this is basically, if you look at the 5-minute chart, right, you would see the retracement a bit better here. This is something I would personally not trade that much to the downside because I still see the upside momentum. I don't like trading against the momentum. But for those that like reversals, then perhaps this particular break right here, when the 114.75 is broken, could have been a small trade, or even maybe this break here, right? But I don't like trading against those. But those are particular breaks that could have been possible for more aggressive reversal traders. From a 1 hour point of view, or 30-minute point of view, I was looking for the break above these fractals. That never happened, remember? And then the bounce at 114.75, which did happen, but the bounce just didn't go too far. We actually went down to about 114, where we got a bigger bounce. So for me, this particular trend line probably very important, connecting more or less these tops. And would like to see a break above that, and a break below the support would probably mean price could go back actually to these long-term moving averages, this 144 EMA, and fill up that space between the trend line and the long-term moving average. Yesterday, price dipped below the 21 EMA, and if it does so again, which it's trying to do at the moment, then there is a chance we can go to that long-term moving average. That's the space to the downside. The space to the upside, if we break above 115.50, would probably be to challenge 117 top. So there is a bullish and bearish space. One is with the trend, one is against the trend. And now the only reason why it would make that downside is that as we discussed yesterday, from a fib point of view, price is at a pretty important level. It's either the 117, which is this fib, or the 118 if we use the entire top. And you can see the price is right at the 38.2 fib. And so far has shown some respect to it. Not breaking it, putting a wick a bit there yesterday, even at the bearish candle. So from that point of view, it could be a retest to retest this level, to retest that zone, but perhaps not break it. So any bullish break, I wouldn't want to be too aggressive on the upside target. This is, in the meantime, the 9th candle. So I think we're going to see a few candles of more correction. I wouldn't expect this top to be broken until, let's see, until probably tomorrow. What would have to happen would be a bullish day today, and then a follow through tomorrow. And then it could break. I'm not saying this top is impossible to break, but for today, I wouldn't aim past it. I would aim below it. If a trader is looking to swing trade, perhaps then holding on makes sense. All right, but this is all assuming that the resistance will break, which we don't know. All right, probably it will break one way or another. I don't see price staying in this smaller wedge for all too long. It's quite a tight wedge, so it will not last more than a few hours probably, right, before the price will break to one side. Yeah, that's really it, I think, from the euro dollar point of view. We can take a look. Oh, this daily candle, you can see this daily candle was totally retested. The bottom, the low of this bullish candle did hold. But if this trend line breaks, there could be perhaps a deeper retracement. Yeah, I don't think I really have much to add. Any questions? If you're interested in fibs, by the way, yesterday Nennet and I, although Nennet actually couldn't really join because of technical problems, but hopefully the next time he will. Let's see. You can find out more information about these webinars right here to this link. And we actually had a webinar yesterday. Here you go. There's the link, and that was the first recording on Fibonacci. If you want to see more of those webinars, you can join by sending an email, and that's it. You can participate like that. Just send an email, and you get the heads up when the next recording or the next webinar will be available. So this one you can watch right away. It's a recording from yesterday. So if you want to join, take a look. By all means, you can do through the link that I just posted. All right, and you can see the recording of yesterday and join by sending an email. Join by sending an email to that inbox. All right, info@elitecurrency.com. All right, let's continue. Let's see, any questions? Yes, we do. Would you enter off the break of that top trend line or the break of the fractal? Let's take a look. I think I would. I want to confirm actually quickly with the Camarilla. H3 level looks good to me. Let's take a look at $115.60. So I think even a pending order could make sense. I mean, if you want to treat it a bit more with caution, then letting price make it a rally and then waiting for a bit of a dip before, kind of like the break pullback continuation scenario, would be a bit more cautious approach. So that would be an alternative. I mean, obviously, I think that there is a good space, so I don't think there's anything wrong with the pending. I think both options are just as viable. It depends if one likes pendings or not, or rather looks for market orders. Yes, that's what ultimately, indeed, Caitlin, this level is so important because of this fib, indeed. And it's hitting the 38.2 fib, and it stopped at that. So from a long-term perspective, from a swing trade perspective, or not even from a swing trade perspective, from a position point of view, 117 was a great level was a great resistance zone. Could have been used for short, but stop loss would probably have to be above the 50 fib or at least 100 pips or more probably, because you're looking at a huge weekly trade really, from 117 potentially down to parity or even below parity, right? So from that point of view, it is a massive resistance level, and the fact that we had a good momentum to the upside, all right, could just mean that price might push a bit higher. Ultimately, anywhere between 117 and 118 is just a resistance zone, right? 117, 118 is just a massive turning spot. Doesn't mean it cannot push a bit higher though. It could retest 117. It could, break this basically here, like this, go break above H3, retest this, and then turn back down. Something like that, double top, maybe even break the top a bit to create divergence and then head down. But indeed, we are in a big kind of resistance area and therefore turning area. Absolutely. All right. Let's see, one more question. Yes, there are trendline rules indeed. We can talk about those. Trendline rules are definitely present. I mean, I think that it's always useful to use those rules with some discretion, but there are definitely guidelines that help improve our kind of trendline accuracy. We'll talk about those in a second. Let me first actually, let's see. Let's take a look maybe at a new pair in the meantime so we can use those trend lines on a different currency pair. Let's take a look at the pound dollar. All right. Pound dollar daily chart. We have a lot of trend lines here, in fact. All right, that's a trend line, for instance. Now, one of the things that you can probably see is the number of touches, for instance. When you have a trend line with 2 touches, basically that's just a potential trend line. All right, if you have a trend line with multiple touches, then that becomes more sturdy. That becomes more stronger. So 3 touches is already a confirmed trend line. When we have a trend line hit, of course, with more touches, it just becomes clear that the market sees those trend lines a bit better, right? And even more confirmation. The more confirmation, the better. So from that point of view, this is a very solid trend line. It's a very confirmed trend line. And trend channels often have trend lines that have at least 3 hits. That's a confirmed trend channel. We're talking about the bottom in an uptrend and the top in a downtrend, by the way, with the trend channel. Okay. Now, if we have a trend line, single trend line, not a trend channel, then 2 hits is okay. It could already be used as a breakout level. We're talking specifically 3 hits is more of a confirmation for a trend channel, by the way. Okay. Now, the trend channel will typically have a resistance line like that. Wait. All right, and have about an angle that's going roughly at a probably 30-degree angle. This is a bit shallower, so it's not a really strong trend channel. Obviously, when the angle is less strong, you're just looking at some things that are just a bit weaker in its movement. The stronger the angle, the more power there is. Okay, that's the reasoning. This is a bit weaker angle, so the angle here, the strength of that trend is not really fantastic. All right. Actually, if the angle is too weak, it could be more of a bull flag or bear flag. Not in this case, but just a weak channel. Often in the middle of that channel, there's a heart line, a middle line. That too is a line that's often respected. In fact, often enough, the channel begins like this, and the price breaks through the top of that to extend the channel higher. You can see that this line has some respect as well. Price stops and sees that line occasionally. So that's typical with channels. The pound dollar has that channel and has also had within that channel bounce off that channel here and here twice recently, and has been making this kind of wedge with this kind of resistance stop. That was an ascending wedge because the resistance was flat and the support was angled, and price was fighting against it, right? And eventually broke above it. And within that wedge, we had this support line on the 4-hour chart and this resistance line on the 4-hour chart, and that too was broken like this. So those are actually trend lines. These are single trend lines basically on the lower time frame, and you can of course use that trend lines on all time frames, daily, 4-hour, 1 hour, with different purposes. The 4-hour could be a filtered trend line. Be careful because price could bounce there, but you don't want to trade it. It's just giving you caution of trading too close to it. You can use a 4-hour trend line for identifying the trend. You can use an hourly trend line for breaks and trading the breakouts or bounces, like off of this bottom, or perhaps again off this bottom, because if we look now at the hourly chart, we see that perhaps price is at a bouncing spot. One of the things I don't like about this trend line bounce, though, is that the momentum was quite strong. Now, from a fib point of view, we are at a bouncing spot, plus we have a trend line, and we did break above the resistance. So there's plenty of reason why to think that price could bounce here. And taking a long here is not necessarily anything wrong with it. It's just that the momentum is against us, so that's just a bit of a risk factor. But everything has a bit of risk, of course. This is why, we're trading Forex, obviously. So the R2R here is good, because the risk is about 60 pips if the stop loss goes below this bottom, and the target is, well, we can put a fib from here to here. The target is the minus 272 at 158.60. All right, so that would be the target. 158.60 minus 272 target. So there's a good, almost 200 potential pips there. Now, will price go there? We never know. Obviously, this could be a momentum correction, because if you look at this particular zone right here, it kind of looks corrective compared to the downside. So let's see how many hours we've gone sideways here. 13. Personally, I'm more in favor of waiting for a break probably back above 157.25. Price can get back above these resistance lines, get it back above resistance. I think there's a bit more confirmation above those resistances, right? So from that point of view, we are in a breakout scenario above those particular levels. Also, if price breaks to the downside, it could be a breakout below these support trend lines. But I'm not a big fan of that particular break as yet because there's still an 88.6 fib right here. All right, so I'd rather wait for the bullish breakout. If it does push below this bottom, then I would be interested in taking shorts potentially tomorrow or maybe later this week, right? But probably not today. I mean, I'm maybe a bit more conservative in that than other traders. Some traders take trendline breaks either way and are a bit more aggressive perhaps in reversal trading breakouts. I don't think this is the right environment as yet for the pound USD, personally. Also considering that the 144 EMA is very close by, I don't think that is definitely a bouncing spot at the moment. I don't think it's worth it. If it does break below this support line, 156.25, it does break below 144 EMA, then there's a bit more space down to this bigger trend line. We just talked about it, that big bottom of the trend channel, and that's about 125 pips. That makes more sense. So the pound USD has a lot of trend lines, and we can take a look at some of those. Let me get rid of this. We'll take a look then at other pairs, but just a quick note on these trend lines here. Look at these trend lines. Most of these trend lines are actually using the tops. That is, of course, the preferred method. Using the wicks, I mean, using a precise kind of line that hits multiple spots, as many spots as possible, but respects the tops as much as possible. But it doesn't mean that a trend line like this, for instance, that cuts through some wicks is not good. It's okay to cut through some wicks. In fact, you can even cut through part of the candle. As long as, my rule is that as long as there's not an entire candle outside of that trend line, I think it's a good trend line. But cutting through a candle or some wicks means that there has to be an advantage. The trend line has to be better. There has to be multiple hits, more hits than without cutting through it. So it's okay to cut through, but the trend line has to be better in the sense there has to be more hits. Otherwise, it's not worth doing. You can also draw both. One cutting through wicks, one not cutting through wicks. Both are equally valid, and you create kind of a zone of resistance or support like that. And that's something that is important as well, to keep in mind that both are basically an option. Something I would not do, for instance, is, let's see, like this trend line, for instance. I mean, you can still use it as resistance, but this is definitely, of course, once it candles push through here, that's broken. So it's not more relevant for now at the moment. Let's see if we can find more practical examples. Let's take a look at the dollar yen on different time frames. Dollar yen, we were looking at the break of this kind of 119, 118.25 zone. Hasn't happened yet. Still valid, the break to the downside here, below that support level. All right, dollar CAD actually hitting the 272 target, tracing back, now back up, and has some space now to the minus 618 target, I would say. So you can see maybe some more CAD weakness up to 134.25 here, the target. And that's where we can see some trend line bounces off this support line, some trend line breaks. Here you can see two trend lines, one basically drawing through some of these candles, right? Drawing through them. There's no entire candle above it. And one trend line basically connecting the exact tops as well. Right. So one trend line has a bit more hits, the other trend line has less hits but more exact hits. Both are on the chart, and eventually we did push through totally above it. Here you can see an entire candle, this particular bullish candle, entirely above those trend lines, and then we got a follow through. So I would think that the dollar CAD could get some upside here, looking at the fact that it pushes with another higher high. Let me put on the moving averages. Let me use the sequence level here from this spot. We're above the third level, so we're in a breakout territory. Now let me use the fib here. So I think if it dips back to the 38.2 fib, it could be interesting. 132.75. 50 fib, equally interesting, by the way. Wouldn't expect much deeper at this moment. I like the dollar CAD. I think that could be an interesting pullback continuation setup. We did break now above that minus 272 target. Often enough, more often than not, we should see some follow through, at least probably to the minus 61.8 target. So that seems interesting. Similar, also just, I wouldn't say similar maybe to the pound if it breaks above this resistance. That's also something on my watch list. Your dollar as well, same thing if it breaks above this resistance, or perhaps if it bounces off the support to the upside. A counter trend trade above, below L3 to the downside. So those are the things I'm keeping an eye on. Dollar yen perhaps too, but I'm not, maybe not a, it's possible. I'm maybe not that big of a fan of it, but it's possible. Let's see if there's anything else. Euro yen is looks quite choppy. Get rid of this. It's getting annoying. Pound yen is not interesting in my opinion. It's too wild at the moment. I don't know. Not a big fan. We can take maybe a look again later on. We have a first trend line like this already. So if it breaks below that, that could be already a first breakout. I don't know. These euro odds and pounds odds, they've really accelerated so much, and they're just tremendous, huge spaces, but also tremendous, huge stop losses. So it's not really that appealing at this moment. Let me take a look at this 10th candle. Yeah, well, from that point of view, I'm still expecting a bit more retracement action on this currency pair, at least for today, perhaps. Let's see on the hourly chart. If it breaks this top, we could see price retesting this, but I wouldn't expect the major top to be broken. So there's about, there's about 280 pip space. Tremendous amount, but of course, that's just because of this massive movement. This trend line, if it does maybe go deeper, this could still provide support. Same thing for this one, in fact, right here. And those are levels to think about. I think support down there, resistance, breakout potential above. But it's just difficult to trade, I think, with such a massive movement at this moment. These trend lines, support trend lines, I think I could only trade really if price shows a candlestick pattern and bounces. I'm not a particular fan of those at this moment. I would rather wait still. Let's see, Euro New Zealand, probably till tomorrow. Euro New Zealand, also 10th candle. So the thing is that the momentum is over to the upside, at least according to my rule, and we're now in a consolidation zone. That should last still a while. That's the thing. And most of these euro and pound versus yen, CAD, odd, New Zealand crosses have this particular structure at this moment. So let's see some questions. Let's see, or comments. First of all, Caitlin, 2 touches can be found absolutely anywhere. Yeah, that's very true. There is a certain filter perhaps that I use that I just didn't think about. When I say 2 touches is okay, I'm actually thinking about a situation where price is in a trend and it's making a consolidation. So for instance, let's see. Can't find a good example here. This moment, a second. This one here. That's only 2 touches, but it's okay because price is in an uptrend. So if it breaks above that trend line, it's an extra confirmation. So in those cases, it's okay as long as the trend, as long as there's a strong trend, I would say, or some trend at least. But obviously, 3 touches is better. 3 touches is good, especially when you're looking for trend, understanding what the trend is, and not necessarily a break, or also trading bounces. But for with the trend breakouts, I think that's probably only that would be an exception then, because sometimes the trend continues without us getting those 3 touches because it just keeps moving. Sometimes you don't even have 2 touches right before it continues, like here for instance. Retracement and continuation. There's no 2 touches. There's no even not a trend line there, and that's why in those cases moving averages are useful because there is not even a trend line there. Let's see. European currencies against commodities in uptrend, definitely. If I consider the spikes real or false, well, the longer it consolidates, the more real they start to become, in fact. But with the euro dollar specifically, I am a bit cautious of the upside just because we are in this massive resistance zone at 38.2 fib. I definitely, from a long-term point of view, was looking for upside up to 38.2 fib, and that happened, and now we're there. We are in this resistance zone. It's just that we got there, we got up to the 38.2 fib in a bit different manner than I expected. It happened with such an impulse so fast that I think no one can necessarily expect. But we got to that level, and now, according to my analysis, I'm expecting that turnaround. So let's see. We'll find out soon enough. I mean, the very max what we should see is the 50 fib. Otherwise, if it goes above the 50 or it doesn't happen by September, October, the downside, then something else is going on. Cool way, yeah. Typically, it's like that. If you have, for instance, an upside, right? Let's say big move, and then quick downside. It's actually indeed that's kind of exhaustion. That's kind of a spike, rallies. How do you call it? A false spike, right? And then boom, a continuation. It's always a bit tricky to find out which one it really is, but sometimes you can see a bit more information. Yeah, true, Caitlin. It's this bottom, isn't it? Good observation. Kind of equilibrium level. So if it breaks above that, then, well, it's definitely not what I thought it would be. Yeah, I think this upside is a mixture of August liquidity indeed, just a wacky mix of all kind of news events, problems, Eurozone stuff, but in Greece maybe it's not that prominent, but obviously China and the US interest rate, and it's just this wacky kind of, all these wacky kind of things going on, and in that regard, not surprised about the volatility. So very curious if this will, become indeed the turning spot and fall like a rock, as Caitlin says. According to my analysis, expecting the downside down to parity, which is the long-term target I have for this year, and probably below it. I'm not sure about this year, but eventually the minus 272 target, I guess, 96. Oh, 96. So from that point of view, I like the euro dollar, the pound dollar, dollar CAD probably the most. And the rest, not too real big fans of this moment. Does anyone else see a particular currency pair, perhaps combination that I didn't think about, that you do find interesting or you have a trade on, and we can take a look at that? Because I've really shown you, from that point of view, I've shown you what I find and not find interesting. We could take maybe a look at Beverly's DEX. Let's see. Yeah, getting this bigger consolidation. Look at this. 1, 2, 3, 4, 5, 6th candle not breaking. See that? The 6th candle. And boom, we get the retracement, don't we? And where does the retracement go to? Bounced off a 61.8 fib and almost made it to the minus 61.8. No, actually missed it. Well, yeah, what can we do? Sometimes it happens. Halfway, just a bit above this 272 target. Well, anyhow, what now? Let's see. 4-hour chart is in candle number 7. So if this candle doesn't break the bottom, I think we could see a bigger correction and might get a bigger rally here. Let's see, perhaps up to the minus 272 target. I wouldn't expect much more, in fact. 10,400. Yeah, I don't expect a break either, indeed. Could get one more push down, maybe to the 61.8 fib, and then rally up to the minus 272 target. Then I would expect again downside from this level. Which is the 50 fib as well. It actually stopped at the 38.2 fib. Doesn't have to get up to the 50, by the way. An alternative could be that it builds a wedge here, like this, below the 38.2 fib. Then after a few days, maybe still breaks this wedge to the downside. So at this moment, the most realistic, I think, things that could happen is this wedge or move up to the 50 fib. And after that, I still would expect some resistance to kick in, either at the 50 fib down again, or if we get a wedge, then of course these trend lines become important. The resistance, perhaps for a bigger retracement, the support, perhaps for that breakout. Yeah, sure thing, Beverly. If anyone else has a preference, just let me know. We got plenty of time left, and running out of currency pairs. Maybe we can take a look. Anyone have a preference? I think that you have the same thoughts as me, because I don't see anyone rushing to look at a particular pair. Maybe. Let's see. Dollar index. Big momentum to the downside. By the way, Pierre, regarding trend lines, one other thing, of course, is the number of touches is important, but there has to be some good space too. Like this has good space. There's 3 touches, and those touches are far from each other. Of course, if you have a trend line that is like this, you actually have three hits too, but those are 3 candles next to each other. Obviously, that's not the trend line we're looking for. That could be a good trend line maybe on a 1-hour chart. Oh, see? Nothing, no, it's not the great trend line, but it's possible because there's space between. Market proximity, obviously, if the trend line is very far from where price is, it's not that relevant. And market memory in a way, in the sense that if the trend line fits on the chart, it's a good trend line for that time frame. If it doesn't fit, let's say we are using this trend line like this, right? There's a trend, I don't know, let's say there's a support trend line coming in like that. And we zoom into the 4-hour chart. That trend line is, okay, we can still leave it on, but it's not really a 4-hour trend line. It's a trend line from a daily or weekly chart. And it's good to know its position, perhaps, if it's close to price. But it's not a trend line of that time frame. The trend line of that time frame should be visible on the chart when just looking at the chart. Most of it should be visible. Maybe if a small part is sticking out, fine. But this is a 4-hour trend line, right? Or was one. Now it got broken. It fit on the 4-hour chart. But if we look at the 30-minute chart, that would not fit on the chart anymore. All right, anyhow, dollar index. Let's see. Minus 272 targets, 91.30. So there's probably some downside left. We just broke through the bottom with a bit of a wick though. A lot of momentum. So from that point of view, I would still, from a dollar index point of view, I think there's still some downside remaining. Good momentum. I don't see necessarily divergence probably here occurring. You can check it. No divergence, clearly, very strong. So as soon as this finishes its retracement, I would expect one more downside to break at least this bottom and then get that divergence before maybe a bigger rally could occur. So from that point of view, the dollar could weaken a bit more before it can strengthen. I think that's still at the moment probable. Now, does it have to happen against the euro? Not necessarily. The euro your dollar could just stay in balance around at 117, and when the dollar strengthened, then the euro dollar could fall, for instance, or the euro dollar could still push up, maybe to 117.50. The fact that it pushes to 117.50 doesn't invalidate the potential for the long term to turn around in this area. We are looking at a weekly fib, and a break of 50 pips or even 100 pips above a fib on the weekly fib is well within the range. It's not strange. I'm not sure if we can look at, I would like to look at those, but I don't have access to those through when I'm looking now. I can change accounts. Wait 1 second. One second, folks. I'm just changing the account. Let me answer some other questions in the meantime. Derek is asking if we should test 93 to confirm the end of the downfall. 93, yeah, we'll probably at least challenge that. If not, break the bottom, as I said. I think actually a bottom break is pretty decent probability at the moment. But this is the dollar index, so of course the euro dollar is the biggest factor, but could be dollar weakness against other pairs that pushes this index just below that bottom. Yeah, it's true, Beverly. It is very volatile, and the exotics probably not the best setup anyhow, indeed. Ah, sorry about that. My login screen was hidden from my site, so I couldn't see it. Hidden behind the chats. So let me try to open up S&P and Dow. And then we'll take a look at the euro dollar, dollar CAD, and pound USD one more time. All right, there we go. Let's see. Should be here somewhere, I guess. There it is, S&P 500. Alrighty. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th candle. Here too, I would think that we're in a corrective phase at the moment, at least for the next few candles. Here too, we have a massive downside though. So, I mean, I don't look at stock indices or trade stocks that often, and I'm not sure if the momentum element is the same importance as the Forex. But from this point of view, if we do get a triangle here, a break of the triangle, I think, would still be a good breakout to the downside. And we can see some follow through one more time. That's what I would say normally in Forex, personally. Same like the DAX. So I think maybe later this week we could see perhaps one more breakout to the downside. Now, if it breaks through resistance, then I would say it's good to be cautious it's good to be cautious with the downside, but because in that regard we're breaking a triangle to the upside, and well, there could be a recovery rally, and we can maybe retest these tops again. So from that point of view, I think those are the two lines in the sand probably to mostly keep an eye on. There's a small little supply and demand zone. Be careful of that as well. That could be a turning spot. Bottom in here. I mean, all of these levels could be resistance spots. Something to be careful of. That's something to be cautious. Yeah, I think well, that's a good question. To me, it seems like a crash because of the sheer volatility. If it would be a correction, it would look more like this monthly candle, this monthly candle, this monthly candle, even maybe this monthly candle. But if you look at the size of that candle, I think it's appropriate to call it a crash. Something similar to what we saw actually in 2008, October. Size-wise. Now, of course, this candle is not closed as yet, and we still have a few days. Next week, Monday, we'll know at the end of the day where it closes, and if it closes anywhere decently bearish, I think that's confirmed. If it closes, if there's a big wick, well, maybe we would then reconsider, and we could say, okay, it was a crash, but it recovered pretty strongly, so we want to be careful with that. So I think we could wait to the end of August to make a more confirmed kind of opinion on that. But for the moment, yeah, I agree with you, Beverly, that this is more of a looking like a crash. Does that mean that the crash will necessarily continue? We never know, obviously, but I think that there's a decent chance, considering the momentum, for a follow through. Definitely. Let's take a look at the Dow. Probably the same thing. Did break the bottom. That's a small difference. Here too, lots of momentum and a good chance of follow through. I guess this is what at least a lot of traders, or at least some traders, were eventually expecting, that finally this would break, because it's been crawling up and up and up. But there was a lot of there was divergence already present, and it was just not able to push any further. Finally, the break came. Now the question is, how far can the break indeed last? How far can it go? But at the moment, I would say at least one more bottom break is not too much to ask for at this time. I don't know. I don't really trade it, but this is just my analytical observation. Obviously, it's always good to keep an eye on the triangles on this pair too. All right, great, Beverly. So let's take a look at those last majors. I think we can wrap it up then. I don't want to hold you up. Let's see, dollar CAD looking for the bounce at 50, maybe the 38.2 fib, up to the minus 61.8 target. Not this target, sorry. This target. Let's see. I think now I forgot which fib I had. Was it this one? I think it was this one. 134, 35. Your dollar could make a retracement perhaps down to this L5, the 133 support. If it does break, it could retest the top. Something to keep an eye on. Pound USD break above here could be a breakout to the upside. And otherwise, Euro Yen, we can take a look at it. Euro Yen, yeah, I went quite fast through it, and that's just because not really appealing to me at the moment. It's let's see. Let's see. There's this support line. There's this resistance line. This resistance line. All right. Otherwise, we're still in more of a bullish territory, I would say, despite the weird kind of ups and downs that we've seen. There's a trend line. Here's a trend line. It's a difficult zone to trade in, I would say. Yeah, it is I would say even an uptrend at the moment, but it could become if the support trend line breaks, it could be a good breakout to the downside. It retraced all the way up to the 78.6 fib of this last swing high swing level. So if it breaks this support, it could go down to the minus 272 target. So if it breaks the green trend line, that's the space to the downside, potential space. If it breaks to the upside, then we can put the fib from here to here, and you can see we had a 50% bounce, and the target could be this minus 272 target. So depending on which trend line breaks, I would move the fib from here, bullish or bearish, and look for the target. Besides the minus 272 target, there's also a 61.8 fib at about 130.31, 132. That's why I was not really that interested in this pair right now, because of the fact that I would like to see price really show its true colors here. Whether, what's its intention, bearish or bullish break, in fact. Now, if it retests this bottom, it could be a good bouncing spot. And if it breaks above these trend lines, it could be a breakup, but I don't like the breakup too much because it has not so much space. So yeah, that's my 2 cents there. All right. If you want to join tonight's webinar, you can do so as always through this link /education/webinar@onemarkets.com. Before that, and tonight is going to take a look at Murray math. And tomorrow, I actually don't remember. I think we got the website already running. Let's see. Well, yeah, taking a bit longer. Tonight, Murray math. Tomorrow, there is a webinar with none of them myself as well. So take a look at that, and you can find the topic. Thanks so much again, and see y'all soon. Wish you good trading and happy hunting. Cheers.